Hey, what's going on, real estate investors? So today, talking about the recent raise in the Federal Reserve for rates. Was looking here at the article, the Washington Post, but it's pretty much everywhere. But the Fed just recently raised by 3/4 percentage point its benchmark lending rate, which has a frenzy effect across just the stock market and crypto as well too. You're seeing a lot of volatility with crypto and the impact there as well. But this has been the largest rate increase since 1994, when they raised the rates by 3/4 points. So a lot of people, when it comes to real estate investing, are in panic. They're a lot of people are predicting a real estate crash. I'm not one of those that's thinking it's going to actually crash, but I think there's going to be a slowdown for sure. Yeah, there's going to be a slowdown in sales, just where is that now, because the interest rates for a mortgage are kind of directly correlated, and so you're seeing rates go up over 6% now at the time of this video. So there's a lot of changes happening right now. We all know during the pandemic that we were in a low interest rate environment, which overall was one of the lowest rates that I think environments that in a long time ever, actually, for us being able to purchase a house. I think right now our last house, primary residence that we bought, we locked in at 2.65 at a VA veteran loan that we have right now. And so rates were at historical lows. And so now I think a lot of people have sticker shock. Well, not necessarily sticker shock, but they're just shocked in general with the economy. Inflation's running rampant, which is why the Fed had to take the action that they're doing. The supply chain is still screwed up with the pandemic, with China shutting down entire cities, people not showing up for plants, making products and goods that we normally consume across the world, across the entire world, not just the United States. Then also you have the geopolitical piece with Russia, Ukraine, with the war going on right now, and so there's a lot of moving pieces that's impacting economics when it comes to jobs, as well as just what people are ready to spend money on. And so they got to raise rates. Inflation's running rampant. They got to cool the economy off. And with that, they try to not induce a recession, which I think is inevitable at this point. I think it's going to happen. But for real estate investors, what does that mean to you? Should you buy a house? Should you still be should you still be investing in real estate? And I think the answer is yes. But you need to be cautious. You need to make sure you're underwriting your deals conservatively. You're probably not going to see a lot of appreciation going forward, but I don't think you're going to have a crash. I think housing has gone up like between most areas between 30 and 40% over the last 2 years. So if we lose 15, 20%, is that a crash? I don't think so necessarily. But I think pricing of real estate right now has pushed at least the entry level buyer out of the market. And so you got to get things back affordable where wages can catch up with the cost of housing and cost of living in real estate. And I think right now where we're at, we're kind of out of phase. And so certain areas are going to be more affected than others. But I think each individual market, you need to start looking at some of the metrics that drive the inventory levels in your market. Understand where you are right now from inventory. How does that compare to like year over year inventory levels, historical levels? Are you in equilibrium? Do you have 6 months of inventory? Is it still a buyer's market or is it still a seller's market? Understanding those dynamics are going to be key. Understand where the median home price is in your area, or track that. The number of listings that you have. And I also like to look at, when you start talking about the inventory and what's going on with the inventory, with understanding how many new listings have come on recently, and just kind of compare that to last year with are you seeing an uptick in new listings that's come on the market? And then just the days on market. How long are things staying on the market when it comes on before you're going under contract? And kind of gauge that, and just watch that over time, and just understand where it is, that now you can kind of keep a good pulse on your local real estate market and not worry about the national news and what they're talking about, but understand what does that mean to you and your market. Understand where the jobs are. If jobs are still coming there and people are still opening businesses, then you should be good, and you might not see a whole lot of churn in your market, because a lot of people are staying put. They have low rates. They're not getting out. They're not selling. And so if people are still moving there with jobs, then they're going to have to find somewhere to stay. And so you may see prices kind of stabilize a little bit first for maybe even up to a year or so before they just start dropping when you have because it's going to take time for inventory to build up in certain areas. So I think that's some things for people to care to start managing and monitoring as they go forward, and understanding how their market is changing and evolving with the real estate, with the rate increases, because I think it's definitely going to be an impact, but greater in some areas than others. But I'm primarily invested in the Southeast. I think that we're in some good markets that are stable from an economy standpoint and with job growth. And I think from a real estate investor standpoint, I can buy rental properties. It may take a little bit longer to hold flips, but so you need to plan for at least 6 months of holding costs. But, you can also look for opportunities where you can refinance and keep rentals, because that's the other side of this. Now that people aren't buying houses, they still have to have somewhere to stay. And so rentals are going to be in high demand regardless. So if you're a real estate investor, you know how to find off-market deals, you're going to be in good shape. You can still do deals. You need to buy them at a better price, whereas that you can be conservative, make sure that you can cash flow. And then also, having multiple exit strategies is always good as well too. Whereas that now you can limit some of that downside and risk with the deals that you do. And so that's it for this video. Just want to talk about the recent rate increase and just how it is directly correlated to what we do as real estate investors and what that means to us and how we manage our portfolios, what we're buying, what we're looking for, what off-market deals. And I'll share a little bit more about that, with how our messaging is changing, talking to motivated sellers, and then just the approach with kind of working between wholesaling deals to other investors, fixing and flipping properties, keeping some as rental properties, and then taking profits and capital for the flips and actually buying apartment buildings with it, and just the wealth building strategies like that. So we definitely we'll share more of that. Definitely, if you have any comments, drop the comments below. Subscribe to the channel for more information. And be notified whenever I drop new videos. And then if you have any questions, I would love to be able to provide some content directly to kind of help some of the situations that you're looking at or kind of trying to walk through. So share that information below, and I will see you on the next video.